And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show, presented by RIA Advisors.
And good morning. Welcome to Financial Fitness Friday. I'm Rich Rosso, CFP, Danny Ratliff, CFP squared. Good morning, everybody. Hope you all had a good week. It's all about the Fed. It's all we're going to care about until next week. Treasuries are higher, dollar weakening. So it's going to be the debate. How big will be the rate cut? I still say 25 basis points. We had U.S. producer prices picking up slightly, unemployment benefits ticking higher, gold on a tear. Gold is up 25% this year. I love gold. Gold member. So Danny, it's all going to be bated breath. I would not want to be in the seat of the Federal Reserve chair because darn if you do, darn if you don't. Yeah, 25 basis points may not be enough, 50 basis points too much. It's going to be interesting to see how markets take the news and the statement.
These next 4 or 5 days are probably the best days because the Fed's on their quiet period. They can't talk. And so, you know, they're not saying anything until Wednesday. Now, right. Ex-chairman Fed Dudley came out and said he could argue for a 50 basis point cut. You know, let's see what actually materializes here. You know, I don't ever envy their position because of the things that they have to, you know, to deal with. Right. Obviously, we talk about how it's transitory has been their main word, and it truly is. And, you know, we've seen these rate cuts bounce around from 6 to 0 to 1 to potentially 3 or 4. Mm-hmm. I don't think they know. And that's a tough position to be put in this environment, right? We have such a different era of monetary policy. And it truly is, if you think about it. I mean, the things they've had to deal with over the last 4 or 5 years compared to, other Fed, their residency, right? It's a lot different. And I think that's where this is going to be really difficult. It's going to be very easy. It always is to be that Monday morning quarterback and say, well, you guys screwed up. But,
well, all I know is in the good old days when the Fed had a backbone, they wouldn't have moved rates at all based on these conditions. They would have needed more data, right? I understand labor market's cracking a little bit, but inflation is still not where you want it. And that was very important, and they would probably not move. But they relent to markets. And that's just the world we live in today when it comes to the Federal Reserve. So it will be interesting to see, listen, what are they going to do? They'll say, we'll cut 25 basis points and we'll look at being more data dependent. But next year, the expectation is 5 rate cuts, most likely.
So I guess the question is, do they go ahead and front load this and get out ahead of this potentially?
That's the big question, right?
But then, like you mentioned, what does it do to the market?
Uh-huh. So how does the market interpret that, right? Good or bad news? You got me.
I don't know. I mean, I feel like weekly it changes.
It does. It absolutely does. So he can't take away the 25 basis points. He's committed to that. So now it's just, will it be 50? Either way, with the elections and so forth, you're going to see more volatility. That's just the way it is. Bonds, thankfully, have been the hedge we've expected. That's been great. So it is nice to see bonds performing. Gold has helped to some degree. And if the Fed continues to cut rates, that might still be a good place to be. So, overall, though, you never know how you're going to open or how you're going to close. I mean, the trend changes midday. Last few days, whoever's leaking information, if NVIDIA's leaking information, any little tidbit that's going to move the market, it's hypersensitive at this point.
Yep. No.
So you've been getting a lot of questions, Danny, about the election and who wins and how markets go. And I've been trying to explain to everybody that history shows that a divided government produced stronger stock returns than one party control.
Well,
so that's what we have to hope for.
Yeah, and explain that. So regardless of who's in the White House, essentially, what does that mean?
Well, if you have a divided Congress, pretty much nothing big can get done, right?
Yeah.
So your greatest risk that you have, even for inflation and how both parties are talking about tariffs and more aggressive tariffs, that's where you might see an increased level of inflation and the Fed's not going to be able to move.
Yeah, and that's right. And so I think we're going to be dealing with a lot of information coming in. Obviously, everything's extremely polarizing at the moment, but most of this is rhetoric because at the end of the day, a lot of this has to pass through the House and the Senate. And that's going to be key. So if you think about it, if everybody, if you get one way or the other, it's all red, it's all blue, get the big wave, that is going to mean that there's going to be a lot of changes that likely happen quickly. And so when that occurs, you think about this from a business perspective and even just how that impacts you and I from a personal, financial planning perspective. How do we plan for future potential higher taxes? How do we plan for the different events that may occur? But these big businesses, they have to deal with this at another level. And so a lot of money is spent on attorney fees, scrutinizing their current, the way they're doing things. They have to change. A lot of red tape is typically applied in different areas. And so that can be cumbersome to a business where they're not putting the money into R&D. They're not putting the money into growth. And that is where, we're looking at an investing out for the future. That's where it becomes difficult. Now, when you have that division, which it seems like we're going to always have some type of division, there's actually some positive things to that in the sense that not as much gets done. And we can argue that's right. We can argue that's good or bad, but from a market perspective, the market, at least as of the last 10 years, has really liked that aspect. And so I think that's where we have to remember that, look, a lot of these things that they're saying, you may not like them, but the actual, what's the percentage of that actually coming true? And that may not be a whole lot compared to what you actually, to what the news may tell you. But, I think you're really campaigning on two separate platforms. And, we can argue that, Harris has some very inflationary policies. Trump has some inflationary policies. And, at the end of the day, what are they going to do to spark or continue to accelerate the economy? Obviously, we've been in a deceleration mode here, which is what the intent was of these higher interest rates. And so, all the things that we're seeing right now, we should expect, because when rates are higher for longer, this is typically the outcome. Now, moving forward, how do we keep that pace, keep this treadmill going and, keep the hamster on the wheel? At some point, it may fall off. And that's what I think is the biggest concern for everybody, because we look at a lot of the economic data, we look at the recession indicators, we look at all of these things that are out there.
That's right.
And they're flashing, right? Bright yellow lights saying, hey, warning, warning, slow down. But things can change quickly, and that's what we have to be prepared for. That's where it is extremely difficult when we're managing money, when you're thinking about where to put funds, what happens next. And it could be two separate outcomes based on who's elected. And even from inflation, bonds may be great for a while, but at some point there may be you may have to get off the.
I think the biggest lesson is that labor market is cracking, and that was the linchpin holding this all together. So it will be interesting. When we get back, we're going to talk about our RIA retirement blueprint. Give you a little preview of what's coming tomorrow. Thanks again. Stay tuned.
Investment news you can use. Delivered at the speed of the internet at realinvestmentadvice.com.
Building anything of substance requires careful planning, including your retirement. You need a blueprint to structure your funds against volatility and turbulence in the market. If you fail to plan, you plan to fail. Richard Rosso and Danny Ratliff share the RIA Retirement Blueprint. Saturday, September 14th at the Hyatt Centric in the Woodlands. How to structure your savings, level your risk, and craft a secure future. Register now for the Retirement Blueprint with Ratliff and Rosso at realinvestmentadvice.com. Realinvestmentadvice.com.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. Realinvestmentadvice.com.
The Real Investment Show.
Small businesses are discovering that attracting and retaining top talent come down to more than just salary. In today's highly competitive job market, compensation is more than just wages. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Healthcare and retirement plans can make the difference in hiring and retaining the best employees. We can show you how to build an affordable, effective employment package that delivers true value for your workers and your business. Call me toll free at 855-RIA-PLAN or online at realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
And welcome back. So, you got to think about what a blueprint is, right? You can break it down. It's a design, right? It's a technical drawing. It's what your landscape, your envisioning of your landscape for retirement is how we're trying to put this together for you. So you do a financial plan. Even if you don't, in your head, you have a blueprint. You know exactly your imagery. Now, it may not be right. You might be looking, you're biting off more than you can chew, but you have an idea, the older you get, of envisioning what retirement might look like. And everybody's retirement blueprint, believe it or not, yeah, they have some of the same rooms, Social Security and Medicare and all this other stuff, but they are very different homes. Everybody's retirement is different, right, Danny? It's the most personalized thing I have seen when it comes to planning. I mean, you can look at college savings, but I see a lot of threads of commonality. But when it comes to retirement aspiration, it's a swath of different things. And I think until you maybe hit 50, maybe even a little older, is when you finally start to say, you know, what is it supposed to look like? I'm just going to continue to do what I'm doing. Or I'm done, like, after this period of time. Like, I really am feeling burned out, and I got to get this stuff together. So this is, again, so completely personal. Even with people who feel like they have a lot in common, their blueprints are going to be totally different.
So different. You know, and sometimes that commonality can be good and bad, right? Because we see times where, especially amongst friends or your peers, and you may have common hobbies, common interests, but you may not have the same net worth. And so I think people get in trouble sometimes when we start to try to set the bar with our friends and, you know, oh, they're going to go on this trip. And you say, well, we're going to do it too. And then it's a one-time deal. But then it turns into a 2-time deal, 3-time deal. And now you're spending way too much money. And so it's really good to be able to set your own parameters within a plan. Mm-hmm. And I think that plan's unique to each and every individual. You know, and sometimes it's unique to to partners, husband and wife. Mm-hmm. And at the end of the day, though, you have to have a common goal. And you know, the most successful relationships, the most successful families that we work with, we've talked about the communication is key. Mm-hmm. They set these expectations up front. But, you know, we've had this conversation, Rich, where we've told people with, $500,000, hey, you are great, even less. and people with tens of millions of dollars. Like, guys, you spend way too much. I mean, you're going to be on this for a while. There's no way you can retire unless you change lifestyle. And many times, a lot of people say, "Well, I'm not willing to do that." Mm-hmm. And so that's the struggle, is that, finding what works for each and every individual. We talk about the all those commercials that say, "What's your number?" Do you know your number truly? Because there's so many caveats to that number, and that number will likely continue to change.
Well, what was that recent study that they did saying that what was your number? It went from like 2.5
to feel wealthy
to 2.8 million.
Yeah.
Like, okay, where did you get that?
Well, the funny thing is that's not even as much as inflation's gone up over the last 4 years, 5 years.
But how many people do we know that have a quarter of that and their retirements look fine for them?
Yeah.
Right. Everybody's number is so different and specific to the goals and aspirations that they have. And some people live very simply in retirement. That doesn't mean that their quality of retirement is bad. It's just different. They live I have clients, again, that they have way less than $500,000 and their debt's paid off. They have a little part-time job. They took Social Security in a smart manner. They're fine. They feel like I don't want for anything.
Yeah. And that's the key, right? Is having debt paid off. That is a big game changer when it comes to as far as what you need for retirement. Because if you have that debt paid off and you don't have huge aspirations to get into the next house or go buy another one, that is where we see a big change in the sense of a financial plan, the viability of it from a long-term perspective, because those expenses come way down. Now, you may retire with a little bit of debt, but we can go in and section that portion off in the sense of saying, okay, well, when let's look at the amortization schedule. When are you done with this? Okay, it's going to be in 2029. You're retiring now, so we know we've got the next 4 or 5 years that you're going to be spending X amount on this, and we will eventually reduce your output and what you need from an expense standpoint. And so what I always find interesting, though, is that sometimes you'll talk to people and you say they just assume it's a pay raise.
Yes.
You're like, oh, I was spending $3,000 a month on my mortgage payment, but it's done. I'm going to take that $3,000 and spend it. Mm-hmm. And maybe the plan will work by doing that. But we need to start thinking about breaking it down. So when we talk about a blueprint, there's so many things that go into building one for each and every family. And that blueprint essentially is going to talk about what are the non-discretionary expenses. So we typically break it down into needs, wants, wishes. So needs, that's going to be, what does it take to keep a roof over your head, fed, clothed, protected. Wants, I want to travel every year, every other year. I want to spend X amount. I want to go do this. I want to gift. Those are things we want to do. We don't have to do. And then the wishes, I want you to put down your pipe dreams. What is your big wish? What are the things you'd love to do? And, the problem is, I think that a lot of people get to retirement like, oh, I don't have enough money to do that. So we're not even going to talk about it because I don't want to be let down. Mm-hmm. Well, hey, our goal is to try to get you there or say, hey, you know what? Maybe you can, but maybe you don't do it the way you thought you were going to do it. Here's another path you could take. And that's the beauty of building out this blueprint, is that you're going to have multiple avenues you can go down. Mm-hmm. And some may work better than others. And that's the goal, is, how do we continue to grow assets? How do you have that to reach all of your goals and objectives? But also, how do you mitigate risk? How do you manage money in different markets? Can you take a more significant drawdown? Because we know, while granted the markets go up more than they go down, I know with mainstream media it doesn't always feel that way, but
that's true.
There are, but the problem is, especially once we get closer to that, becoming a distributor, it is much, much different. So we visit with a lot of clients, their kids. And I love doing that because it is basically, you're building out that blueprint from the very beginning. So, a lot of times, if you think about it from a house perspective, if you're an architect or you're going in and you're building this out, many times we're coming in the final stages, mm-hmm. right? The roof is on, most stuff has been done, and there's not a whole lot you can do to maybe, not going to say not add extra value. I always think there's ways that we can do so. But when you have somebody who's just starting out with that blueprint, man, it's a lot of fun.
It is fun.
Because
they're building it, and you're trying to create this vision along with them. I have clients that don't have any wants or wishes.
Yeah.
They live so simply. Like, I'm not even going to put it down. And again, it's not for everybody. I have people that want to travel, and I will tell you how they do it. These vacations are not, you're not going to Italy, you're not going to Ireland, you're not going to all these exotic places. You're going to some places in Texas, you're driving to Tennessee, you're renting a room. I have one client that sleeps in his car. He's the cheapest traveler I've ever seen. He puts the foil up and he sleeps in a parking lot of a Walmart.
Clarified that. I was thinking he lives in his car.
No, what I'm saying is, that's what I'm saying about blueprints. They're
they are
darn different for everybody. And some stories like flabbergast me. You know where the funny stories come from? The kids who have parents about to retire, and these parents are instilling retirement knowledge onto the kids, and the kids just, their eyeballs hurt from rolling up. Because they come in and see me and go, oh my God, my parents and their retirement thing. These kids are 25 years old. They don't want to talk about retirement. We have to talk about these milestones, these things you need to hit, these, like you said, debt, basic DNA, right? Debt, savings. If I have a couple in their 20s that I met with a few weeks ago, was so great, that have very similar philosophies on debt and saving, and they were great savers. I said, I don't have to worry about you being retired. Will we be able to retire? 25 and 27. Will we be able to retire? I'm not worried about that. I'm worried about what habits and are you going to get you to where you need to go. And with you saving 25% of your income and keeping track of your household debt to income ratio, I almost was floored. I'm like, you all are fine. You all are fine.
Yeah, and I think that's the struggle too, because a lot of times if somebody's just building that plan out from, like you're in their 20s and 30s, the software is typically not, I'm not gonna say it's not built for that, but you'll get a probability of success that maybe isn't what you would want right away. So it goes back to building the behaviors, the habits. Visited with somebody yesterday, and it was kind of like, they're like, you know what? Right now, we are in a really good place. We're healthy. I'm going to do a high deductible health plan because I want to be able to contribute to the HSA. We're looking at what is a Roth versus a pre-tax for their 401ks. Looking at all of those things, and then any other thing, going through the benefits at work and not letting, utilizing every low-hanging fruit that you can, disability insurance. And so, it goes much further and deeper than I think many people expect as far as building that out. It went as far as, even like, hey, we've got this insurance. Should we get umbrella, a policy? How do we protect ourselves? So, and that's different state by state.
So M. Maranta says, sometimes just reading a good book can make you happy. Books make me very happy. That's all I need. I don't care to go anywhere. I don't have to go anywhere. If I have a book, I'm good.
He's not lying.
I'm not lying. We'll be right back.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
Building anything of substance requires careful planning, including your retirement. You need a blueprint to structure your funds against volatility and turbulence in the market. If you fail to plan, you plan to fail. Richard Rosso and Danny Ratliff share the RIA Retirement Blueprint. Saturday, September 14th at the Hyatt Centric in the Woodlands. How to structure your savings, level your risk, and craft a secure future. Register now for the Retirement Blueprint with Ratliff and Rosso at realinvestmentadvice.com. Realinvestmentadvice.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets, and unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Just just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
The Real Investment Show.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
I remember in school those history stories about the late 1800s, and now Gen Z kids are now calling the 90s the late 1900s.
The Real Investment Show podcast.
And I feel like I just drank from the wrong grail in Indiana Jones.
Same show, your schedule.
I was talking to my daughter a few weeks ago, and I said something that she didn't agree with, and she goes, "Dad, you're just getting old and not relevant anymore."
At realinvestmentadvice.com.
Not relevant.
You're not relevant.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning. At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. Realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
Building anything of substance requires careful planning, including your retirement. If you fail to plan, you plan to fail. Richard Rosso and Danny Ratliff share the RIA Retirement Blueprint. Saturday, September 14th at the Hyatt Centric in the Woodlands. Register now for the Retirement Blueprint with Ratliff and Rosso at realinvestmentadvice.com.
You're listening to The Real Investment Show.
And we're back. And listen, we still have room tomorrow, Saturday, September 14th, 9 a.m., Hyatt Centric in the Woodlands, the RIA Retirement Blueprint. Sign up at realinvestmentadvice.com.
So Rich, why don't you let people know kind of what to expect tomorrow? So this is a live event. Unfortunately, this is not on online. You know, at some point, we'll look to do something similar. But, you know, we used to do a lot more of these live events. And, you know, it's just fun to get out in front of people and hear what's important to you guys. And, you know, you lose a little bit of that interaction online. I mean, obviously, I don't know about right now. The YouTube chat room is pretty fired up.
I don't know what they're taking over there on that chat room, but it's potent.
They're on their third cup of coffee, maybe.
I don't know.
But it's great. Love you guys. But, you know, if you are in the Houston area, it's a great time to come meet the team. We're going to have quite a few of us there. You know, love to shake your hand, say hello, and answer any questions you guys may have. So, you know, we go into quite a bit. So Rich and I have been talking about the retirement blueprint and, you know, what that means. And it means something different for each and every person. But we're going to go through, you know, we're just kind of talking about it right now. Tomorrow, we're going to get into some details on, you know, what are the things that you really need to dive into. And Rich,
well, it's really the game plan, right?
Yeah.
Tomorrow, we are going to talk about Social Security and Medicare and tax diversification in retirement, unless you think taxes are going lower in the future. How does your investment portfolio fit into it? A pre-retiree's life and route ready to retire when you can't really afford to take a 20% hit.
That's right.
Right? So I always call it the crossover. I was telling one of our clients last night at the event we had, because some people have a very hard time in the transition to retirement. And I said, listen, you were once Tim Allen on Tool Time, and there's Wilson across the fence, and now you're Wilson, and you're just getting into that skin, you know, and you're looking over. You're not Tim Allen anymore, right? So, and then I talk about the harvest, right? You've put all this you put all these seeds in the ground, you've grown trees, you've got the fruit. It's time to pick the fruit. That's how it works. So, but again, there's an emotional component. Speaking of books, one of the best books ever was called The New Retirement Mentality by Mitch Anthony. It's how to rethink retirement and create really a fulfilling, flexible retirement on your terms. Not what the financial services industry wants you to do. No magic numbers. Nothing along those lines, right? It's about connections. It's about the qualitative elements of life. One of the best books out there. It does, again, challenge the traditional ideas and from the Wall Street financial services spin machine on what you should expect from retirement, what you need for retirement. And it turns out many times, Danny, doesn't it, when it becomes one of the most discouraging things in the world for people who are trying to save for a goal. Right? That's the problem. When it's personalized to you, it takes that away. You're not competing with the Joneses on a retirement plan. That's not the goal. It seems like that's where there is competition too. Well, the neighbors, oh gosh, they went to Milano last summer, and then they went to Italy. This place, well, there's Italy, Texas.
There's Paris, Texas.
Is there
too.
Paris?
Yeah.
We can go. You can go.
London. I mean, you can go a lot of places, and it may take you about the same amount of time if you flew or you drove.
Exactly.
To the real one or the real one here. But yeah, that's right. It's so personalized. But I think that's where many people get off track is that, we are trying to keep up with the Joneses. And sometimes we just have to take that step back.
You would think you would end that by retirement, though. You would think you'd be done with that, but you're not.
Well, I think
not.
a lot of people think they are. But, a lot of times when you have, especially if you have a high income earner who's always been able to do that, we have many people that can just do whatever they want. But also, we have to think about like, okay, well, you retired early. You're 58. You have a long lifespan here we have to account for. And just because your buddies who may still be working or they were in a different scenario, they're doing these things doesn't mean that you have to or should. And that's where the struggle is. Here's what I see a lot of times. It's like you have friends that retire together. And the financial situations are different. But now nobody's getting that. You're not in the accumulation phase anymore. You're not still having money coming in from your working. Now you're drawing down assets. And that's where I think
that's the dose of reality, right? When you're actually pulling money from the accounts.
So what I love doing is looking at, okay, hey, we're in distribution mode. You said in your plan you're going to spend X amount. So, we've got to look back at plans and say, okay, well, what happened? Did we not make enough money? Did the market not do well? Did you distribute too much? There's a handful of factors that always go into it. At the end of the day, once the plan is built out, are we still on track, and why are we not? What can we do to rectify that? And so many times you start talking about distributions, and those distributions are like, well, you said you're going to spend $120,000, but you spent $300 last year. Oh yeah, had this come up and that come up, and okay, one-time deal. And then you look back and say, all right, well, what happened this year? You spent $275. Oh, shoot. Well, another one-time deal. But you start to see a pattern, right? And then, so that's where you say, well, listen, you can go this long. And I think the biggest thing is I feel like a lot of advisors are yes men. And the number one conversation, like, I don't want to have with somebody is like, hey,
this room doesn't work in your blueprint.
Yeah,
as a fiduciary, you have to have sometimes these tough conversations.
You've gone too far, way too fast. And look, we're going to have to downsize this blueprint.
You have a lot of those conversations. You always have people that really spend a lot sometimes, and you have to really rein them in.
Occasionally.
And that's what our job is.
Yeah, occasionally. I mean, more often than I'd like, because I don't think anybody intends to do it. It just happens. And, life happens quick where you got, a family member's ill, or you need to travel to go do, one thing or another, but it all ends up, kind of leading together, right? AC breaks, car breaks down. And, when it rains, it pours. That is very, very true. But if it's pouring every single year, that's where you got to say, all right, let's go back to the drawing board. Something has changed. And, if we don't, here's what you can expect your kind of lifestyle to look like. Because
you have to figure out, one, where is the pressure coming from for these new spending? Like, what's the What's the motive behind it, right? So then you have to be like a psychological Columbo.
Yeah.
Because you have to figure out, wait a minute, why are we doing this? And then you find out it's either peer pressure, even in 60s and 70s, or it's the kids that are pushing the purchases, or the kids need the money. So kids and grandkids also affect what sometimes these individuals are doing.
Way too much do the kids dictate a lot. And, some of it is, hey, I promised them I'm going to give them X amount for a wedding, or, I had this last year.
What?
And I know you're listening.
Uh-oh.
And no, we have these conversations. But so, I have a client we talked about, and, he said, yeah, it's okay to use this. But,
okay.
He, just a little bit overspending, right? And it was one of those deals where just one thing happened after another, and, just that prime example of it. And he said, all right, I'm reining it in. And then, we get a call for around Christmas time. He's like, Danny, I need $10,000 for Christmas gifts. And I was like, what? For who? He's like, the kids. I was like, you have 2. Yeah, they like expensive stuff. I was like, you know what? It may be time to have a really good conversation right now, because they may like all the things in the world, but I don't think I've.
That's
but it's been a precedent that has been set over many years. That hey, that's the thing that they love to do. They love to spend. And they're great people. Love to gift things. And I said, well, that's great, and I appreciate and I understand what you're trying to accomplish here, but this may not be. We've had a couple years where everything's kind of happened at once. This may not be the best thing to do. And it may be time to have a conversation of like, hey, maybe let's rewrite this gift list. But, that happens more often than you think.
It does happen.
But you have a really good method for that, which I don't think many people could employ.
Disassociate with your kids, move away, change your address. What?
No, you have your book that you every year you write down, what your budget is beforehand. Say, hey, here's how much we're going to do. Here is
with the girlfriend, that's sort of out the window. But
true.
But to your point, I do keep track of how much I spend every year on holiday gifts.
Yeah.
And no one's going to dictate to me how much to spend.
Yeah.
Unless God forbid there's a health issue, somebody needs something, right? That's different, right? You're always there for your people you care about. But too many times in retirement, other people are driving the bus. That bothers me. And you have to get to that when you see an irregular pattern of spending like you've done. Because sometimes parents don't even want to tell you. Oh, well, things come up. I have a client that will not tell me, and I know where the money's going. Like, why are we spending so much here? Suddenly, oh, well, this broke down and that broke down. That doesn't cost what this amount of money.
This amount is.
And she won't tell me. I have tried every which way to get it out of her, but I know what it is. It's the children. I know what it is. She's afraid to tell me.
Well, and that's okay. I mean, there's ways, we've been working on a lot of gifting strategies here recently where, you know what, instead of leaving this large inheritance, I'd rather gift a little bit at a time, build up their financial acumen, and let them, kind of grow into the funds. But also the utilization of that is so much better at this stage in their life than it will be when they're 60 or 70.
Marie in the chat's got the best idea for gifts for kids.
Yeah.
Cardboard boxes.
Oh, man.
Cats love them, but let me tell you, kids love them. Go get yourself a refrigerator box. Not a refrigerator.
I've got
you don't
two
want to put the
boxes
kids in
in
the
the-
fridge,
yeah.
right? They can't get out. But the box is everything.
I keep thinking that's going to get old. It hasn't.
It doesn't.
No.
It's timeless. Cardboard's timeless. I'm going to put that on a pillow. We'll be right back.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Building anything of substance requires careful planning, including your retirement. You need a blueprint to structure your funds against volatility and turbulence in the market. If you fail to plan, you plan to fail. Richard Rosso and Danny Ratliff share the RIA Retirement Blueprint, Saturday, September 14th at the Hyatt Centric in the Woodlands. How to structure your savings, level your risk, and craft a secure future. Register now for the Retirement Blueprint with Ratliff and Rosso at realinvestmentadvice.com. Realinvestmentadvice.com.
Small businesses are now being challenged by the lack of employees and how to attract and recruit the best employees. To get the better employee, you'll have to offer a better package. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Don't assume a 401k plan is too costly or complicated for your small business to offer. Let us show you how to make the most of an affordable and effective plan that will deliver true value for your business and your employees. Call me toll free at 855-RIA-PLAN or online at realinvestmentadvice.com. That's realinvestmentadvice.com.
The Real Investment Show.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. Realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
So part of your blueprint strategy is you got to ask yourself, and something we've been getting to in a long-winded fashion is a return on life assessment. What does that next iteration of you look like? If I'm not working, how am I accomplishing tasks? Somebody on the chat asked me about, what did Grandma Rosso do? Did she ever retire? Italian grandmothers do not retire. But they used to have a lot of grandkids, right? You always threw them in grandma's house. And you knew the cooking was good because your mom couldn't really cook. But grandma, Italian grandmothers, no retirement there, right? How will I remain active? Where can I contribute? How do I learn new things to keep my mind sharp? How will I pursue my passions? You know, it's an inward look that goes way beyond numbers. Because the first thing probably an architect's going to ask you for a blueprint is, tell me your vision. Share with me what you're thinking, right? That person wants to know before you get down and dirty with numbers is tell me about you. And there is this return on life. And I know a lot of clients that, again, they don't have a lot of money per se based on the magical numbers that everybody needs. But they have a very high return on life.
The quality of life is great, right?
It is for them. For them, their return on life equation looks a lot different. I do have one client that she spends a lot of her time going through old bookstores and antique stores. That's her fun. They have the the Round Top Antique Festival coming up in October. I always go to that. That's huge. That's what she does. She goes, she walks all the places, she finds all these old books. It doesn't cost much of anything for her, and she's out, and she loves it. I mean, for someone else, they might go, oh my God, I'd rather be strung up, right? It's so different for everybody.
It is, and so we're getting grief on the chat saying,
Again?
Well, about spending, and I think that spending, it's different for everybody. And here's one thing going back to what you were mentioning, like you had somebody who didn't want to tell you how much they, like where
the money was going, but I know where it went.
Yeah. But
yeah,
I think that there's a hesitation sometimes of people even using an advisor because like, I don't want somebody to tell me what to do or how much to spend, or I don't want to do a budget, or I don't want to do.
Or maybe they're ashamed. Like they feel like they know that they haven't. And we don't cast aspersions. We don't have any
No.
We're not looking at you that. But I understand. Like, imagine, you haven't worked out, you know you're overweight, you eat badly, and you don't want to go get that blood test because you know what the doctor's going to say.
I'm gonna get better first, then I'll go see him.
Then I'll go
right?
see him.
Yeah. Let me get healthy first.
Then I'll go.
Yeah, I think we're all.
But I
guilty
think
of
that's
that.
the same. I think it's the same thing, and then they realize it's not as painful as you think. Small adjustments make big changes over time.
Yeah.
It's not like I can't see the light at the end of the tunnel.
And that strategy of say, hey, I want to give $10,000 for Christmas gifts. Guess what? I've got a lot of clients that do that or more every year. But it's in the plan. It's something that they can achieve. And if something else that the needs section gets out of whack, or all the other things begin to add up, well, then we've got to find a place to cut somewhere. And so we're just advocates. And so really looking at, we're not going to tell you to sell your Lexus and go buy a Pinto. I saw that comment.
Those 1976 Pintos are pretty sharp. With the wood grain on the side, wood grain simulation.
And Donna, congrats.
So
Grandkids will be awesome.
Miranda goes, used bookstores have been declining. They are great, but here's the deal. If you go to just antique stores, they have books now. They have become the used bookstores. And you will find books and authors from the 1800s, 1900s that you never knew existed. And those books are like 50 cents to $1. And some of the best books I've ever read have come from these little antique stores in small Texas towns that are not bookstores. So just to give you an idea. Get out there, and Maranto, hit the antique stores. You'll find the books. You open that book and you smell that smell of paper, that smell of rotted, molded paper. It smells so good. So, yes, Amazon was just a bookstore. I remember when Amazon was just a bookstore. I used to buy I thought that was the coolest thing in the world. I can get all my books online. Paradise. Now I want to go to the stores and get the books.
Well, but now the stores are gone because of Amazon.
Yeah, right.
So.
Now I'm in a dilemma.
Yeah.
But then I found them in the antique stores. Yeah. Yep. So the thing you got to remember, again, is there's a lot of qualitative things that are going to probably frustrate you more than the financial stuff. Because the financial stuff, will help you understand Medicare. It's important. Social Security, maximization, what to do. Sure. How to be more tax efficient. Great. But boy, if you're not happy or don't understand what you want to be, who you want to be when you grow up, that's a problem. And I have some people, what my retirement is?
Work.
Never retiring. Right, Lance Roberts? He sent me a question the other day from a guy who's still working. I answered it about IRAs, and he's 77. I said, I thought this was from you. The guy was 77 and still working. He didn't respond to me, Lance, with that. He didn't think that was funny. I'm like, look, someone who's 77 years old is still working. You and him have a lot in common. Crickets. I heard nothing about it.
Yeah, he likes the idea of it.
The idea.
But he also likes getting people there, I think, more than he likes the idea of it for himself.
Well, he's becoming more of a recluse. I mean, I don't think he leaves his room. In this new office, I don't think he's ever going to leave. We're going to have to knock on his door, leave the food tray, and leave. And we know when it's empty, he's eating.
Yeah.
But I think he would lose his mind if he wasn't able to work and write and be engaged. I just think he would. I know I would. I can't do it. I just don't. I think that would be the time that I'm ready to go. I need to be that active and engaged.
Yeah, it's different for everybody. I mean, some people can flip that switch and they're just like,
they love it.
Whoa,
right?
we are done. A lot of times it may be a health issue or something that's a scare that says, you know what, we've been doing this for so long. If I can make it, I'm done. I just can't stay on this hamster wheel any longer. But you see the other as well when they're like they retired, they get start doing some contract work, and now they're traveling more or for work or working more than they worked previously, but it's something new. So it's kind of reinvigorating. And so, everybody has a little bit different plan, and your plan will likely look different tomorrow than it does today. And that's not uncommon. But that's why it's so important to go back to that, have that blueprint, have the plan in place So we can say, all right, well, things changed. So like, give you an example, the one who retired, went back, did contract work, working a ton of hours, getting paid very well to do so. So now we've had to push off doing a more hefty Roth conversion. Hey, you're going to taper down next year. Yep, that's the plan. All right, next year is going to be when we're going to look at that conversion. Maybe have a little bit of a wiggle room to do one this year. But those are the types of conversations and discussions that you need to be having with your advisor as far as, what does that distribution period look like? How do I most effectively take from all of the different places? Hopefully you have multiple places that you can draw down from. And, to minimize taxes, to reduce Social Security taxation, to keep your Medicare premiums down, to avoid potential surcharges on capital gains. All those little things that, nobody has ever taught most people about, but it's all about how do you keep more money in your pocket. And I think that that's crucial to get that done all along the way.
It is. But before you get to all that formal retirement planning exercise, which is very important, boy, you better really need to reassess who you are and who you want to be. And I think that's tougher for a lot of people. What's this new life look like for me, right? As I cross over from being Tim Allen to Wilson, right? What is that crossover? I got to jump that fence. What does it encompass to get over it? And that, to me, by the time I get down to the numbers, I've already hit a major I've already eliminated a major obstacle with clients because it's that qualitative approach. And your point, there are some people that can settle into it because they've been thinking about this retirement. They have visualized it so much over the last 3 to 5 years. When they go into it, they're in it.
Yeah.
They're done.
And they're great because they still have something to maintain that sense of purpose. It may
That's
be
right.
Charity work, grandkids, time spent with, your spouse or loved ones. You seem to find a flow and a schedule. Like, hey man, I'm going to go pick up the grandkids every Friday from school. Or I'm going to do golf. Or Wednesdays we're going to the church to work, or we're going to go to the homeless shelter.
Don't you think a lot of older Americans would be great teachers? Not if they didn't have to just deal with all the bureaucratic crap. I'm talking just getting in the classroom and helping kids. I think they would be great.
Oh, fantastic. So Chris Behan, our business development officer here.
Is he doing that now?
No. Well, I think he's doing it.
Oh.
He doesn't realize it.
Oh. Okay.
But so Chris said he went to a funeral of somebody that was close to his family, and he said that the guy would set up in downtown New Braunfels like in the square area, a table, and just had a sign out like, ask me anything. And he'd just sit there and just, evidently the guy was a wealth of knowledge, just a really great personality, good guy. But how cool is that to be able to, have just somebody random, I think in a lot of ways, just
cool.
to hear something different. And
Yes.
man, life experiences, I think that there's a big gap.
We're going to do that.
that.
We're going to have one in Brenham, like in the town square. We're
Yeah.
going to call it Old Men Pontificating.
There you go. I love it.
Old man yells at a cloud. We'll get Lance there in his chair.
As long as we bring water balloons.
We'll put an AstroTurf lawn.
Yeah.
Put him a chair on his lawn.
I'm going to drive by every 5 minutes and hit him with one.
That'd be great. You all have a great weekend, everyone. Come out, see us tomorrow. Hyatt Centric in the Woodlands. Other than that, Monday, Lance is back. Talk to you later.